In September, there was a lot of volatility in the markets in general, and that led to a risk aversion that was seen kind of system-wide. And so we saw the euro the euro weaken versus the US dollar from 144 at the beginning of September down to 134 at the end of September, which is a very, very large move for a currency, especially such a widely used currency and such a liquid currency as the euro.
So in September, currency trends showed a strengthening of the dollar versus the euro. When you look at currency fluctuations, how does that affect the return that investors receive?
So a lot of investors have indirect exposure to the euro through some of their international fixed income and equity investments. Any investments denominated in the euro will have declined by not just the decline of that equity or that bond, but also by the decline of the euro in that time period. So they'd have got a double whammy, if you like. As equities declined, so would the currency value of their holding, and so they would have experienced sharper losses than they might otherwise have thought they would.
So investments in currencies involve quite a bit of risk exposure. Given that, what can investors do to protect their investments in currencies?
I think first of all, investors have to understand where their currency exposure is coming from. You don't just have currency risk if you have from just exposures directly in currency. You will also have currency risk from any international investments. And so it really behooves investors to take a good look at their portfolio and look at what products and what investments they have denominated in foreign currencies. And then they have to decide for themselves if that's the kind of exposure they want to take, and if not, they should take steps to manage it. If for fixed income, you could maybe move from local currency denominated debt into dollar denominated debt. Most international issuers are also issuing in the US, so that should be available to them. And for equity investments, you might want to look to move towards domestic stocks or towards international equity investments using a currency hedge, which are generally available these days in the retail market.